Hi guys, it's Stock Curry. Before we get into today's video, I need to talk to you about something very important. A lot of YouTubers have been called out for doing pump and dumps lately, and if you buy into a pump and dump, you will most likely lose money. So why is this becoming such a problem lately? Well, over time, hype stocks change from industry to industry. Last year during the pandemic, it was all about recovery plays, and then it was all about EVs, and then everybody was talking about SPACs, and now it's penny stocks. And what's different about penny stocks is that very often these are low volume stocks. So when a YouTuber mentions a penny stock, the volume goes up dramatically, and that can cause the price to go up very fast, much faster than a mid-cap or large-cap stock. So what's happening is people are buying these penny stocks just because a YouTuber recommended it, and the price goes way up. And then those same people, many of whom are day traders, are selling the stock, causing the price to go down. Well, you might see the video a few hours later or even the next day, and then you go and you buy, and immediately the stock drops 30 or 40%. And in your mind, you look at the chart and you might assume that this was a pump and dump, when in reality, it was just a low volume stock that got hyped up and lots of people started buying it. So understand that the YouTubers I follow are not purposefully doing pump and dumps. They're recommending stocks that they honestly believe are good stocks to buy because of news, technicals, and financials. And in most cases, YouTubers are looking at these stocks as long-term holds. So if you buy a stock just because a YouTuber recommends it and you lose money, that's on you. That's your fault. Don't go blaming the YouTuber. With any of the recommendations a YouTuber gives, you need to be doing your own research and your own due diligence. You are responsible for your own trading success. If the only thing you want is for someone to tell you what to buy, you're better off getting a managed account and letting your financial advisor trade for you. Not everybody is cut out to do self-directed trading, and that's okay. That's what financial advisors are for. They are there to help you choose which stocks to buy based upon your unique investment goals. So to recap, YouTubers are not intentionally doing pump and dumps. While price swings are just par for the course when it comes to penny stocks. Penny stocks are very volatile and very risky. So do your own due diligence and research before you invest in any stock. And remember that at the end of the day, you and you alone are responsible for your gains or losses. All right, let's get into today's video. For those of you who are new to the channel, my name is Stock Curry. I used to work as an analyst for Merrill Lynch and Morgan Stanley, and now I analyze stock picks from the top 15 YouTubers. I then compile all of my analysis into a daily video that I post right here on this channel. I spend hours every day watching YouTube videos so that you don't have to. All you have to do is watch one video each day and you will get every single stock pick from the top 15 YouTubers. And all I ask in return is that you hit that like button and subscribe to get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright, before we get into today's stock picks, I just want to remind everyone that I'm not a financial advisor, and none of the YouTubers I follow are financial advisors either. Today's video is purely for entertainment purposes only. Alright, let's get into today's stock picks. First up is ABML. This is American Battery Metals Corporation. They're a lithium battery recycler. And StockMo likes ABML because they are building their factory near Tesla, and it looks like they're going to be doing business with Tesla. By the way, guys, if I'm going through these too quickly, all of the tickers are in the description of the video, and they are in the description in the order in which I am discussing them. All right, next up is ALPP. This is Alpine Technologies. They're an American drone company with American technology. Stockmo said he owns ALPP and likes it for a long-term hold. Next up is AMC. This is AMC Movie Theaters. Smart Trader mentioned AMC again today after they released some news. They have reopened most of their theaters and they can finally start making money again. The stock is still very cheap right now. Smart Trader says this is a recovery play now and he thinks AMC will get to $5 very soon. Smart Trader also said this will trigger a short squeeze and we could see AMC get well above the $7.70 high it had last year. That said, there's still a lot of risk with AMC in case we get shutdowns again or AMC needs to raise more cash. Next up is AZRX. This is AZRX Biopharma. They're a pharmaceutical company. They have a drug that should be ending phase 2 trials in Q1 or Q2 of this year. If those trials are successful, you should see an increase in price on the stock. But if the trials fail, you will most likely see a drop in price on the stock. Analyst price targets range from $2 to $7, assuming the phase 2 trials are successful. Next up is BFT. This is a SPAC and they are merging with PaySafe, which is an online payments platform with a focus on gaming systems. Tech Conversations gave an update today, letting us know that some news came out last week that one of their investors was predicting a 300% gain on BFT. That would give it a price target of $45. Now, technically, the MACD turned bullish yesterday, but the RSI is still overbought. Next up is BIOL. This is BIOL. They're a dental medical device manufacturer. They make dental lasers for cosmetic, restorative, and surgical applications. They have over 250 patents with another 43 pending. They have been in business since the 1980s, and they've had sales for years. Their revenue had been decreasing over the past 3 years, which is why the price was so low. Their balance sheet is decent, and there are no red flags that I can find. Jack Spencer did let us know that they're supposed to have a reverse split tomorrow in order to stay NASDAQ listed, and that could cause downward pressure on the stock. As dental offices start to reopen, though, Jack Spencer thinks BIOL's revenues could increase, resulting in a rebound in their share price. That said, Jack Spencer was not super bullish on the stock and said he had not bought any shares yet, but might take a small position at some point. Next up is BW. This is Babcock and Wilcox Enterprises. They're environmental, thermal, and renewable energy company. Stockmo included BW in his list of his favorite penny stocks for 2021. Next up is CBAT. CBAT produces a lithium ion phosphate battery, which is the same battery technology that NIO is using. Smart Trader says Friday may be the last day to buy CBAT below $7. He expects CBAT to reach $10 very soon. Next up is CCIV. This is a SPAC that is rumored to be merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. No news on the merger today, just an update on Lucid Motors from ZipTrader. Lucid Motors said that their devotion to efficiency and luxury will put Lucid Air well above any competition. ZipTrader finds this interesting because they are literally saying that they are better than Tesla, and the timing is perfect. Not because they're about to start shipping their first vehicles, but because sending out press releases like this is how companies generate hype right before they go public. And hype is what the company needs to increase their share price. Next up is CTRM. This is Castor Maritime. They are a commercial shipping company. Richard Allen mentioned this company today. Now I will tell you that when Ken and Grace mentioned this back on the 12th, I could not find any good reason to buy it, mainly because of their financials and large amount of debt. Today, Richard Allen explained that they just purchased another ship, so this company is growing. If you look at their financials, you can see that their revenues are in fact growing, but with their huge debt, it's questionable whether this company will still be in business much longer. So if you want to invest in this company, just keep in mind that this is a very risky play. You could lose your entire investment. That said, there is an insane amount of upside potential if this company can remain solvent. So it's up to you if you want to gamble on CTRM. Next up is ECOR. This is the ECOR. They manufacture an electronic device that is designed to help with pain relief, thus lowering the need for prescription painkillers. The good news is that they already have FDA clearance, and revenues have been growing by over 50% year over year. The bad news is that they are running low on cash. Since the stock price ran up recently, this is a good time for ECOR to do a stock offering to raise cash. I do expect that to happen soon, which will put downward pressure on the stock. I will also say that technically, this stock has a nice wave pattern to it, so it would make a great swing trading stock. Next up is EXPC. This is a SPAC and they are merging with Blade. Blade is an air taxi company similar to Uber, but for air travel. They were also getting into building electronic helicopters. Tech Conversations gave an update today reminding us of the SPAC and letting us know that ARK Invest continues to buy it. Next up is FCEL. This is Fuel Cell Energy. They're a renewable energy company. Chris Sain said that they had bad earnings, which is why the stock opened in the red today. Chris Sain used that as a buying opportunity and bought FCEL in the $15 range. He made about a 9% profit off of FCEL today. Next up is HOME. This is at home. Chris Sain and Smart Trader gave us updates today because after running flat in December, HOME finally woke up in January, and especially today. Both Chris Sain and Smart Trader have a $30 price target on HOME, and both are holding their shares. But while Chris Sain is holding, he also purchased a $20 put option on it, just in case it goes back down. For those of you who are new to investing, when you have a long-term hold that looks like it's ripe for a pullback, you can purchase put options to manage your risk and protect your profits. Buying put options on your stocks is like buying insurance. If your stock continues to go up, you'll lose the money you spent on your put option. But if your stock drops in price, your put option will go up in price to offset your loss. Next up is MBIO. This is Mustang Bio. They're a pharmaceutical company. Their drugs are scheduled to complete their phase 1 trials in Q1 of 2021. If results from those trials are good, we could see significant upside potential on the stock. Analysts have price targets ranging from $7 to $13, assuming they have good phase 1 trials. As with any pharmaceutical company, this is a risky investment and you could lose your entire investment if the results from the trials are bad. Next up is NIO, N-I-O. This is a Chinese EV manufacturer. StockMo reminded everyone today that the drops we've seen lately are normal for NIO. This needs to be a long-term hold for you. NIO is not the stock to swing trade right now. Chris Sain also said that if you bought a put option last week like he recommended, now is the time to sell. He thinks NIO is near a bottom and is about to go back up. Next up is NNDM. This is Nano Dimension. They are a 3D computer chip printer manufacturer. I explained yesterday what the news on NNDM was, so watch yesterday's video if you want to know why NNDM went up today. StockMo said that he added NNDM to his portfolio today. Zip Trader called today's rally a FOMO rally, pure and simple. Richard Allen said to expect a pullback because there will probably be some profit taking, and that is exactly what I did. I sold my NNDM today at around $13 because I was up over 50% on it, and I think we're going to see a small pullback in the near term. I still like NNDM though, and I'm hoping to get back in at around $11.50. I updated my buy-under price on NNDM to $11.50 and upped my ideal buy-in price to $11. I used the proceeds from NNDM to buy CCIV and PSTH today. My hope is that one of those two SPACs will announce a merger in the next few days while I'm waiting for NNDM to have a pullback. And speaking of pullbacks, my financial friend thinks NNDM is going to do another share offering soon. Richard Allen said that a share offering is possible, and Ken and Grace also said he expects NNDM to do a share offering soon. Despite that, my financial friend recommends to hold your shares and not sell because every time they do a share offering, NNDM rebounds and goes right back up to new all-time highs. So what you do with your shares really just depends upon why you bought and your profit targets. If you are a swing trader, now might be the time to sell. If you are a long-term holder, I would continue holding. Next up is PRQR. This is PRQR Therapeutics, and this is a pharmaceutical company. They have 5 drugs in their pipeline. One of them is already in phase 2/3 trial. However, results won't be available until Q1 of 2022. So there's no urgency on this one. That said, if the phase 2/3 study is successful, analysts have price targets ranging from $20 to $22. Next up is SBE. This is a SPAC and they are merging with ChargePoint. StockMo said he is not concerned about the recent drop at all. He also thinks that the bottom is near and we'll see this go back up soon. I will also remind you that I have a buy-under price of $40 with an ideal buying price of $36. Next up is SEAC. This is Sea Change International, and they are a video delivery software solution. They make the software that is used by on-demand video providers such as DirecTV, Dish Network, Verizon, Cox Cable, BBC, and many others. Smart Trader noted that volume has increased significantly over the past 4 days, and put a buy-under price on SEAC of $1.30 and an ideal buy-in price of $1.20. This company only has a market cap of $50 million, but the contracts they have received in the last 9 months are worth $63 million. Also, they are projecting revenues of $100 million over the next 3 years. So you could say this stock is undervalued. Next up is SENS. This is Senseonics. They're a pharmaceutical company. I covered this company extensively 2 days ago in my stock picks for Wednesday, January 20th video. If you bought this company yesterday, after 4 different YouTubers mentioned it, you are losing money on this stock, and probably a lot of money. Richard Allen gave an update to remind everyone that if you did the right thing and bought the stock because you really believe in the company, you should take this opportunity to buy more. I will add that if you did the wrong thing and just bought the stock because 4 YouTubers mentioned it, then you should sell every stock you own and give your money to a financial advisor. I'm not trying to be rude, I'm honestly trying to help you out. I've seen too many people lose $10,000 or $15,000 within a few weeks. It's just not worth blowing up your account because of a YouTube video. If you're not sure what you're doing, please give your money to a financial advisor. You can still keep $1,000 or so to learn with, but letting someone else manage your investments is way better than losing your entire life savings. Next up is SUNW. This is Sunworks. They're a renewable energy and specifically solar company. StockMo thinks SUNW will continue to rise with Democrats taking full control of the country. Democrats are expected to invest heavily in renewable energy infrastructure, and all renewable energy stocks should benefit. SUNW is already up over 300% this year and approaching 400% gains. And personally, I'm not sure how long that run-up can continue without a pullback. StockMo says he expects a stock offering soon, which makes sense given their recent run-up in price. Next up is VGAC. This is a SPAC, and they have no merger target yet. This SPAC was founded by Sir Richard Branson, the owner of Virgin Galactic, ticker symbol SPCE. I covered this stock extensively in my stock picks for Wednesday, January 20th video, so you should watch that video if you missed it. Jack Spencer initiated coverage on the stock today, saying that he was mad that he only bought 300 shares. Jack Spencer pretty much said that the same things that Tech Conversation said 2 days ago, so I'm not going to repeat everything. I would just add that Jack Spencer thinks this SPAC could jump over 100% or more once a merger is announced, and that the rumor pieces are starting to fall in place that VGAC might merge with Virgin Orbit. Jack Spencer thinks the upside potential far outweighs the downside potential on this SPAC, making this gamble worth it. Next up is WKHS. This is Workhorse, and they're an American commercial vehicle manufacturer that is getting into EVs. Jack Spencer let us know that ARK Invest just sold 500,000 shares of Workhorse. This is concerning because the natural question is, what do they know that we don't? We don't know the answer to that definitively, but Jack Spencer is speculating that ARK Invest is just lowering their position because WKHS is a very speculative play and they are trying to reduce their risk. We'll have to continue to watch what ARK Invest does over the next few days, but WKHS was only down 2% today, so it didn't really affect the stock price that much. The good news is that WKHS is now under my buy-under price of $23, so if you've been waiting for WKHS to drop before buying, now is a good time to consider opening a position. Alright, I hope you guys enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is. And if you want to get some free stock, sign up for Webull through my link in the description below. For 1 more week, they're going to give you 4 free stocks when you sign up and deposit $100. I also get 1 free stock, so it helps you out and also helps the channel out. And finally, remember to hit that like button and subscribe if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.